And hey, everybody, it's Mark Newstater with eXp Realty. It is Thursday, July 29th, almost the end of July already. Where is summer going? It's another weekly real estate update. So excited because we have a special guest in the mortgage broker seat today, Anita Lemke with Anita Mortgage. Hey, Anita.
Hi there. How are you?
I'm good. Can you believe that summer is almost half over? It's kind of sad to think about.
I know it is sad. I have to say I have been enjoying summer to the fullest so far. Outside of working, hitting the golf courses, doing some swimming, doing some floating down the bow. This is just
Ooh.
a beautiful time to get outside and enjoy it. And I've been, I can honestly say, taking the best of it.
That is awesome. Before we go any further, we should let people know that you're the Jaden's better half.
I didn't know about that.
But you've worked together. You've been kind of Jaden's mentor and stuff like that. So how long have you been a mortgage broker?
Oh, since I think I'm going on 14 years now.
Oh my gosh.
It's been a while, yeah.
Yeah, so you've seen a ton of changes in the industry, I'm sure.
Oh, absolutely. A ton.
Yeah.
It's an ever-changing world, this mortgage world. If you don't like how something is working, just wait, because tomorrow it's going to change. And
it's like the weather in Calgary, right?
Absolutely. It keeps us on our toes, and I love it.
That's awesome. Okay, so we're going to get to our weekly stats here. And so interestingly, the Calgary Real Estate Board just came out with their kind of summary for the year to date. And we saw some crazy increases in benchmark prices, somewhere along the neighborhood of 477,000 benchmark detached price in January to 530-ish in June. So some massive, massive price increases. We always track these stats weekly. And so our weekly listings, new listings for detached, 380. So if you look at this line here, I'm going to just pull my mouse up. So this is the line we're looking at. So our listings have really kind of, stabilized over the last month. Bit of a up and down there in the week of the 9th to the 16th. But look at our sales this week. We went back up to 346 for detached sales and 141 pending. So for a total of 487, and our net difference here. So Anita, what we do every week is we go, okay, well, how many solds plus pendings compared to new listings, right? Because that's always an important stat to track. And our net difference jumped up to 107. So that's the highest we've been since the last week of June. You saw that last week of June was 112 difference. So we're back up to 107. So it seems like, maybe people are going on holidays, but they're still buying houses. Our total detached listings decreased again for the second week, actually third week in a row now, down to 2986. So it seems like maybe these are listings that have been hanging on for a while and now they're selling because we're not seeing as much of a replenishment of supply on the detached side of things. And then our total listings with apartment condos, semi-detached, duplexes, row townhouses, detached is 6,565, also down, down slightly from last week as well and the week prior. So we're seeing just a slight decrease in listings here over the past few weeks, as well as our sales popping up again this week. So we'll see again, we saw a really low difference there in the week of the first week of the month. And we've started to build up in sales again through to the end of July. And normally, Anita, I don't know how you find summers in Calgary. Traditionally, what we find is really post-Stampede, we get a bit of a lull, and then kind of mid-August, things pick up. How have things been for you on the mortgage side?
It's pretty much the same on my end. It was crazy. And just even though Stampede seemed to be hit and miss for a lot of people this year, overall, I found it to be very similar to past years. I think the school was out, people were starting to slow down a tiny bit, just take some time and enjoy some time with their family. So I saw the same as I saw over many years, where coming into the Stampede and just over, starting to slow down, but again, picking up again right away. My phones are ringing, pre-approvals, requests are coming through again, and yeah, it's I feel like it's going to continue.
Yeah, for sure. So I mean, it just doesn't. We had a couple of week lull there for sales, and then it's kind of snapped back to not pre maybe the levels we saw in April and May, but certainly we're starting to ramp back up again. I've noticed that in my business as well, buyers and sellers. There's really not much of a summer break for us in the real estate industry. So we had an interesting little graphic here I wanted you to talk about, which is this is actually really interesting to look at because this is historical discounted 5-year mortgage rates. We're going to throw that up on the screen and take a look at that. Back in 1981, the days of the National Energy Program, even 2007. And 2007, 2008 was a very high market. Even last year, those are pretty good rates at 2.44. And this is our historical 5-year rate now. Rates wise, where are we at, Anita? Are we kind of holding steady? Are things changing? What's going on with 5-year rates?
Well, honestly, I'm looking at this graph, and I came in around 2008. And I remember offering rates at 4.79, and that was the best rate out there at that. It was like, wow, I can't believe I'm so excited to be able to offer this, right? Brand new in the industry, thinking I'm coming in at the best, absolute best time. And on like today, rates, 1.65. That's, you can get lower than that in a variable rate today. You're at like prime minus 1.1. So we're talking like 1.35, 5-year fixed on what I call an Anita approved mortgage. So I'm looking for all the bells and whistles. I want the best prepayment. I want the best payout penalties if life happens and you have to break. In that scenario, we're still looking at 1.99 on a full frills product on a 5-year fixed, 1.84 on a 4-year fixed. Like, rates are phenomenal. They have come up a tiny bit, and according to the TD economic update that I was reading this morning, they're still anticipating a gradual increase, but again, they're saying it's going to be modest and gradual. They feel like the bond rates are going to start to rise. Yields are little, which will cause the fixed rates to come up a bit. They're not expecting the Bank of Canada prime rate to change before 2022 and only projecting it to change once. Now, Of course, that's still what the economy says. So we all know that there's many factors that can, I think, what happens with this new variant with COVID, with everything is going to really in the end is going to determine what's going to happen here. But
yeah, for sure. I know Jane's a big fan of variable rate mortgages, but you talked about the full package there because that's so important when we talk about mortgages, that what you're getting yourself into. Like, what are the prepayment options? What are the the early payout penalties? Talk a little bit about that, because that's what I love about mortgage brokers. And of course, you don't have every product for everyone, but you sure could, help out a lot of people. Talk about it from your perspective, how important that is to make sure you know what your options are for prepayment and payout penalties.
Oh, absolutely. So important, because today a lot of people, they just want, they're so rate driven. They say, well, I heard that this rate is out there and I want it. I'm like, well, I don't know if you actually do want it, because yes, I can offer that to you. I can give you a rate that's going to be 10, 15 basis points better than what I really am going to suggest for you. But these rates are going to come with, for example, one of them, like one of the no frills products, they're at like 2.75% penalty to break. If you want to get that, 10 basis points less, but the penalty is astronomically higher. So especially if you take like a first-time home buyer and they want the best rates, they're coming in with their minimum down payment. They're going to, then they're ultimately something happens and they get married, they move, they take it, and within 2-3 years, historically around 3 years, they're making a change, whether or not it was planned. So they make a change. They end up paying that 2.75% penalty to get out of that, no frills, low rate product. by the time they pay yourself, a realtor, they pay the penalties to get out of the mortgage, they don't come out with anything. So they're losing the equity that they thought they were building to start working towards their future. And, you know,
Wow.
and it's not going to happen the way they think. So for me, I personally will never get into one of those the low rate, no frills products. And I don't recommend it to my clients either. I just feel not going to do them any justice at all.
Yeah, and I'm sure, like Jayden has mentioned, you have some sort of calculator for them to actually see what happens if they do need to break within 3, 4, 5 years, right?
Yeah, absolutely. And that is also lender dependent. Some
Right.
lenders, like, not to down the big five, but the major banks versus my, the big five versus what I would call my monolines, the penalties on those are astronomically higher, but because of how they calculate the penalties. They calculate it based on their post-it rate that they give you at the time, and they consider that discount given time at signing, and they calculate that back into the penalty. Whereas my monolines, they're going to calculate their penalty on discount to discount. It's a significant amount of difference, like 2 to 3% lower on a penalty. So you really got to look at the whole picture. Absolutely.
Yeah, that is awesome. Anita, that was great. Thank you so much for your insight. And how can people get in touch with you if they'd like to get more information on the products you offer?
Absolutely. My website, anitamortgage.ca. My phone number, I'm on Facebook, I'm on Instagram, LinkedIn. I'm pretty easy to find. If you Google Anita Mortgage, you're going to find myself and Jayden for sure.
Awesome. Have a great rest of your week. It's almost the weekend, so enjoy it. Anita, thank you so much for stepping in for Jayden today, and you're a wealth of information. We really appreciate you joining us today.
Yeah, thank you for having me. You have a great day.
All right, thanks. Have a good weekend, everybody.
See you. Bye-bye.